Hey, good evening traders. It's the 23rd of February. It's Mark here from TradeAndTrain. We're just going to have a quick run through the markets and what is appealing to us and where we could see some potential nice moves. So obviously the markets are completely driven right now by Ukraine and Russia tensions. The invasion, is it going to happen? Isn't it going to happen? Look, all we can do is trade what we see. The markets will price in what they feel is fit, and we just have to stick to our plans and trade accordingly. So one of the markets that I am looking at, which is GBP USD, or also known as cable, we've just sent out our watch lists to our current members, and I'm just going to run through a couple of the charts that we've sent out and why we've sent them out and what we're going to plan on, how we're going to plan on trading these. So first thing you've got to look at when you're breaking a chart down is the structure, and depending on the style of trader you are and when you can actually trade will be dependent on time frames that you're going to look at. So for example, if you want to trade London or US Open, then you're probably not going to look at the bigger picture like I'm looking at here. This will be more for full-time workers or employees that are looking to a side hustle, something to do. Maybe you've got a passion for the markets and you want to look at taking advantage, or you just want to trade it on demo and just look at how you can get along. So things we're taking into account are patterns, structure, internal patterns, and then we're looking for confirmation of how that market is going to move. So right now we've got a couple of things that are happening. One, we've got the bigger picture, which is we can see the daily structure where we've got these nice clear touches running through here. You see this one? Remember, the markets are random, so you always like to be consistent, so I'll look at the extremes, so the tips of the wicks. It doesn't mean that I'm gonna forget these here because they didn't come exactly to this point. It just means that I'll be looking for a pattern within here before that breakdown to then look at trading this next move down. Whereas this time market came right into structure and then we managed to capitalize on the move down. So now what we're looking at is if the market was going to run back up into structure here. If not, we're looking at this structure here like it happened here and see how we can take advantage. So there's a couple of things we're looking at. One is this short-term trend line. We're looking to see how the market is going to react, and if we break through that, that's going to be a little bit of a call sign to look for trading opportunities. But one thing you'll notice is this blue line through here, there's some monthly pivot. You can see how the market has gravitated towards the monthly pivot but yet rejected it every time. So we're going to need some solid news to basically take that through there, something bearish for pound or something strong for USD, because the market's failed to break that on numerous occasions throughout the calendar month. So we're looking at price to break through here, and as you can see here, we're looking for price to break below 135.2, which will be our call sign to effectively start trading GBP USD short. Now if we drop down to a smaller time frame, what you'll notice is the short-term trend line and the box range that's being formed. So I'm just going to draw in this box range here right now. So you'll see that box range that's been formed on the H4 chart. Now obviously if you're a little bit more of an aggressive trader, you'd be able to take advantage of these tests on the upper region of the box range. So should the market rally back up here and you feel that the sentiment, the bias of the market is still short and you want to be trading that based on the higher time frame structure, then you could be looking for some price action or some cyclical patterns on the smaller time frames to trade it. But remember, as price moves across, as time goes forward, and we've got this ascending trend line here, the return is diminishing. So as time moves across to your right, so is the profit, so is the return. So essentially this is getting less and less attractive the further we go across in this box range. So I'm looking for price to break down and want to use 135 even handle and the monthly pivot as a trading opportunity. I want to see price basically break through. Now one thing we know about pound is when it moves, it tends to move quite aggressively, and you see corrections on smaller time frames. As you can see right now, you can see these corrections are shallow and then boom, we get a nice move back. So I'll be looking for price to close below this trend line, then I'm looking for it to move down and take advantage of some price action, with first take profits coming in at around 134, which is swing low where the corrective move started. So that'll be the start of the next impulsive move, and if we're looking at potential targets, then we can see initial target's going to be around 134, just under 133.85 where the correction started, and then we'll be looking for extended targets towards 132. And if the larger pattern is going to play out, then we will see a test of the lower structure. So the lower structure, that could come in anywhere down here, 129, but how many times does that happen? It's one of these things we really don't know where targets are going to come in, so that's why we want to start taking and locking profits in as the market moves in our direction. But at the same point, we also want to start taking profits off, because at the end of the day, profit that is running is just theoretical profit until it's banked. So you can never go wrong by taking profits. And at the end of the day, this is a positive risk to reward trade. So this is something that looks really nice. This is high on the watch list. Let's move across now to another risk off market. So we're going to look at Kiwi, or New Zealand US dollar. So a couple of things I want you to take note of here, guys, are the corrective structures that are in play. So essentially this market, if we go back a little bit, we can see price was stuck in this little channel that you can see how price moved, had a little correction, impulse, then we corrected all the way back, we've come back down, gone back up. So Kiwi, or this market, New Zealand US dollar, likes to do these kind of impulsive and then bear flag corrective patterns before it breaks out, and you can see we're currently in one right now. So as price is doing this, it gives us opportunities to take, if we're, for example, like this video right now, we're looking for the higher time frame trades, because people that will be watching this, I guess, will be looking at this market from an end of day perspective. But if you're looking for intraday trades, well then, this is where, if you've got your structures marked out, you can have a bias that short term we're looking for a long move, but essentially the longer term picture, you're looking for it to break out, a little bit like we are here. So intraday, there was no intraday longs here because this was only our second touch. We did have longs through here, not just based off the rate statement, but you can see, you can't quite see it here right now, but let me just move this across. I put in our previous watch list long on a daily close above 67.40, and then obviously with the news last night with the Bank of New Zealand, RBNZ, increasing interest rates from 0.75% to 1%, gave the Kiwi a little nudge as well today, plus that early risk on sentiment where the market's dragged in all those buyers, looking at the NASDAQ, the Dow, all positive in the early hours of trading, only to turn very, very negative. NASDAQ now currently down 1.7%, as you can see over here. The Dow down 260 points, this S&P down 48 points. So looking at this, so what we've seen is we've seen the market test what was the original flag patterns support trend line, now testing it as resistance. And then we've also formed another corrective formation, which is a broadening wedge, which I'm just going to drop down to the 4-hour chart so you can see it a little bit more clearly. And you can see we've got 1, 2, 3, 4, 5. Now we've got a 6th. And then if we look at this candle formation in here, we've actually got an evening star formation, which gives us an insight that the market is potentially likely to push back down. So we can trade the internal pattern, which is the broadening wedge, which is a corrective pattern. We'll look to take most of our profits off around the monthly pivot, because here what could happen is we could have another push back up. I don't think that'll happen, but I'm still taking 80% of my profits off down here just in case. And then I'll leave 20% on to run down to previous support where the original corrective pattern started. So we're looking at that. But where does the trading opportunity occur here? Well, if we go down to the 15, what I'm going to show you is how we see a little bit of structure, and we also see the market change cyclical formation. So we've got our high here, creating higher highs, test of structure, the internal resistance, and then we look at our lows. We've got higher lows, and then we have this change. We've got a lower low on the 15, and then we have a push up and a failed high. So this is potentially the first lower high. Now if price breaks through this low here and this M15 structure, what we're going to have is we're going to have our second lower low. So we actually have a sell stop in place through here, we've got our original stop loss above the daily highs. And if this market moves, you can get a 1-to-1 way before the original structure, which is, I think it comes in at a 67.25. And then we're looking for that next move lower down to 66.60, which is just around a 2.6 to 1. So it's positive risk reward. We've got lots of confluence in here, and also we just have any sort of information coming out of Russia, Ukraine, that's negative. That's just going to add fuel to the fire. So this one's looking really, really good for this evening. So let's take a look at, let's come to the NASDAQ. So I've done a couple of currencies. Aussie dollar is very, very similar. So we did a video 2 days, or I did a video 2 days ago on the NASDAQ and saying, is support going to hold? And if we're a buyer, we want to look at a short-term change in cyclical pattern and run it up into around 14,000. But then we need to see a solid close above 14,000 to see some further upside to basically take it into around 14.6. Now, let's just show you the thought process and how you could have made a decent gain on the 5 minute that we discussed the other day, which was price was in here, and we said if price gets above this structure point here, which it did in here, so we said if it gets above and then we can come back and retest, we'll look for long opportunities. So the retest was in here. Let me just make it a bit bigger so you can see. So this was the box range. We broke out of this box. Let's just put it in. So highlighted this in the video. We said if we break out, we come back, we retest, we'll look to trade it up in towards the previous highs. And that's what we did. Sorry, distractions here. This is why you should never have your phone on when you're producing a video. So I've just turned that off right now. So what we looked at is price coming out of here. It broke out. We got that retest. Stops would initially go underneath here. As soon as it starts breaking, then you can be very aggressive, moving stops right up to break even. The reason you would do that is obviously because of the nature of the market right now. You've got to be very, very aggressive. Market moved up, gone on to hit targets. Everyone was around 13.9 to 14,000. It actually went on way up to 14.1, which we didn't envisage personally, but you know, those that held on, fantastic. But how can you potentially look at taking advantage of any market move right now? Well, is this buyer candle yesterday? Is this the market makers trying to suck all the traders in and get them buying the S&P, the Dow, the NASDAQ, getting that risk sentiment moving? If so, then you're probably getting pretty burnt right now. I'd be watching for a break below yesterday's low, and if that happens, you're going to run down to 13.4. We're seeing big swings in these markets right now. So like I said the other day, I'm not a seller of indexes, but I am a buyer. So I'll look at key levels to trade from, like I did here. So essentially, if the market comes back down to, say, 13.4, I'm going to look for some sort of box range, maybe even a spike below, for it then to come back up, and then I'll take that retest. I'll have first take profits, or at least close out majority of the position, 70-80%, as it comes into here, because we could just roll over and have another further decline in these indexes. I will leave some on, like I said, 20% of the trade once we get into these areas, should this scenario play out. If it does, then I'll be looking at the next key level, which is around 14,000, 13.9, and we'll want to see how the market reacts in this area again. I won't be a significant buyer of the indexes until we see a proper change in sentiment. So it's probably going to take something significant to come out of Russia and Ukraine, because right now the sentiment's pretty dire. And I would say that's pretty much it for today in terms of forex and the indexes. But I will take a look, because I did send out a couple of charts related to crypto. One was Bitcoin, one was Ethereum. I did call out short opportunities on these markets. The rally wasn't sustained high enough just yet for me to get triggered into these. I do see Bitcoin heading down towards 30,000, but I need to see a rally into this area here for me to take some shorting opportunities. where I'll be taking profits off at this structure low and also then looking for extended targets in and around 31,000. 31,000 is where I'm going to be looking to be buying this market, but expect a big flush of this level before we potentially move higher. So I would expect to see the market clear out of this level, clear any trash out this level, any leverage positions, and then I'll look to buy it as it potentially moves higher. So that's going to be our setup here on Bitcoin. I'll also be doing the same with Ethereum. Again, you see the market didn't quite rally high enough for our position, but that's what I'm looking for, guys. If you've got any questions on the content, the video, or Trade and Train ourselves, please message below and one of the team will definitely get back to you in the next day or two. If you did like the video, please make sure you hit like, share and subscribe. You know, we do try and do our utmost to make sure you get good value of content from us. So please make sure you hit like, share and subscribe. Look forward to seeing you for tomorrow's video and a little bit of a recap of the trading week. Good night, guys. Bye bye.